You're pulling into a Costco parking lot on a Saturday afternoon and you watch a brand new pickup truck back into the spot next to yours. Crew cab, blacked out grille, factory fresh paint, the kind of chrome that hurts your eyes a little in direct sunlight. A guy steps out. He's wearing the polo shirt with the embroidered logo from the regional HVAC company he works for. Lunchbox on the passenger seat. There's a kid's car seat in the back. He walks around to the bed, unlatches the tailgate, and loads in one case of bottled water and a giant bag of toilet paper. That's the haul. That's what the truck did today. And the truck cost more than his parents paid for their first house. My name is Sam, and today we're going to do something the auto industry desperately does not want us doing. We're going to figure out who can actually afford a $50,000 truck in 2026. Not who the dealer will approve, who can actually afford it without quietly turning their entire financial life into a slow-motion car accident. $50,000 used to buy you a really nice truck. Today, it barely gets you a base model. The average transaction price for a new full-size pickup in 2026 is about $66,000. So a $50,000 truck isn't the loaded one with the heated steering wheel. It's the stripped-down work truck. A base F-150 XL is around $48,500, Silverado LT $47,900, Ram 1500 Bighorn $47,500. Add a couple options, taxes, fees, you've crossed $50,000 without leather seat. The median household income in America is about $84,000 pre-tax. That means we're asking the average household to spend 60% of their entire pre-tax annual income on one vehicle that will lose half its value in 5 years. Trucks have quietly become luxury items wearing a high-vis vest, marketed like working-class values, priced like Italian sports cars from 2 decades ago. Now, how are people paying for these? Not cash. The salesman asks the magic question, what kind of monthly payment are you comfortable with? He doesn't ask what truck you can afford. He doesn't ask the total cost. The monthly payment is where the trick happens. The average new auto loan stretches almost 69 months. For trucks, nearly 30% of loans are 73 to 84 months, 6 to 7 years. Let's do the math. $50,000 truck, 0 down, 7% interest, 84 months. Your monthly $50, $85. Sounds manageable. Over the life of the loan, you pay $63,407. That's $13,407 in interest. You just paid a free Honda Civic to the bank. By the end of year 1, your truck is worth about $40,000. Your loan balance is still $45,700. You are $5,700 underwater after 12 months. And this is just the setup. In Q4 of 2025, 23% of all new vehicle purchases came with a monthly payment of $1,000 or more. 1 in 5 new car buyers is paying over $1,000 a month. That's not a payment, that's a second rent. Walk through any new truck dealership in 2026, and you're looking at vehicles being driven home by the top 15% of earners. The other 85% are down the street, financing a 2019 Silverado at 14% interest. The new truck market is an affluent product, and nobody told the middle class. But the loan is just the start. Insurance on a new $50,000 truck, about $185 a month. Fuel, a full-size pickup gets 18 mpg combined. At 15,000 miles a year and $4 a gallon, that's $275 a month. Maintenance, oil changes, brakes, $90 a month. Tires. Truck tires run $800 to $600 a set, and you'll need them around 50,000 miles. Registration and taxes, another $90, added up. Loan $755, insurance $185, fuel $175, maintenance $90, registration $90. Total full $400 a month every month for 7 years. Now let me show you what that looks like in a real household. Meet the Garcias. Both work. Combined income $90,000 a year, above the median. 2 kids. Carlos works logistics, Maria is a teacher. They rent a 3-bedroom in a suburb. Last year, Carlos bought the $50,000 truck, 84-month loan, 0 down. Payment $755. Carlos leaves for work at 6 a.m., drives 38 miles each way, mostly highway alone. The bed is empty, always empty. Maria takes the kids to school in their 2014 Honda CR-V with 140,000 miles and a check engine light that comes on when it rains. After taxes, the Garcias take home about $5, $600 a month. Rent, $1,850. Childcare, $800. Utilities, $350. The truck, all in, $400. That leaves them exactly zero before a single thing they didn't have to buy. No clothes for the kids, no dentist, no savings. When the CR-V's transmission gives out next spring, and it will, the repair goes on a credit card. There is no emergency fund. Carlos genuinely thought he was being responsible. The truck didn't ruin his life, the math did, and nobody at the dealership ever showed him the math. Now I can already hear the comments, but Sam, I need a truck. I tow. I haul. If that's genuinely you, this video isn't really for you. But the data on truck usage is hilarious. A study of over 250,000 truck owners found that 75% tow once a year or less, 70% go off-road once a year or less, 35% put something in the bed once a year or less, roughly 90% never use their truck for any kind of work. The average modern pickup is a tall, expensive, gas-thirsty grocery getter. It's statistically a Costco vehicle. Picture Dave, office manager at a mid-size accounting firm. Bought the truck in 2022 because he thought he'd get into camping. Bought a kayak. It's still in the garage, never seen water. The bed has had 3 things in 3 years: a bag of mulch, a Christmas tree, and a $40 Facebook Marketplace couch. Dave is fine. Dave is just the average truck owner. We are paying $66. Zero on average for vehicles that haul 2 bags of mulch once a year, because trucks have stopped being trucks. They've become identity. A 4-wheeled performance of the person you want people to think you are, capable, rugged, even if your life mostly involves a desk and a strong opinion about gas station coffee. And I get it. But the problem is that identity costs $1,400 a month. This is the most important part. Instead of the $50,000 truck, you buy a $20,000 used car, a 5-year-old Toyota Camry. Boring, reliable. Total monthly cost, about $700 versus $400. A difference of $700 every single month. Now, take that $700 difference and invest it in a basic index fund. S&P 500 historically returns about 8% annually. Invest $700 a month for 30 years, you end up with approximately $1. $4 million, $1 million. That is a retirement. The difference between retiring at 65 and retiring at 75. All because in your 30s, you decided you wanted the truck. I'm not saying don't buy a truck. I'm saying know what it actually costs. The $50,000 price tag is the smallest number. The compounding opportunity cost of every dollar spent on that truck is the actual price. And nobody tells you that because there's no commission on walking out of a dealership and investing the money instead. The dealer makes the margin. The bank makes the interest. The insurance company makes the premiums. The only person in that entire chain who loses money is you. So who can actually afford a $50,000 truck in 2026? The 24-10 rule. 20% down, finance no more than 4 years, keep total transportation under 10% of gross income. That means you need to make approximately $150,000 a year. Have $10,000 cash for a down payment. Absorb a monthly payment closer to $950, not the $755 stretched over 7 years. That's the top 15% of household earners. And statistically, even those people aren't the ones buying most aggressively. It's households making $60,000 to $100,000 a year. The Garcias, the Daves, stretching terms, putting nothing down, quietly accepting that 30% of their take-home pay will go to their truck for 7 years, doing it because the dealership told them they could. Because the commercials made it look normal, because nobody showed them the math. Until now. If this video does anything, I hope it makes one person pause before signing. Pause and run the actual numbers. Not the monthly payment, the total numbers, the 7-year numbers, the opportunity cost numbers. The difference between affording a truck and being trapped by a truck is one honest calculation that nobody in the dealership wants you to do. Before you buy any vehicle in 2026, sit down for 15 minutes. Add up the loan, insurance, fuel, maintenance, tires, registration, depreciation. Compare it to your take-home pay. Ask yourself, can I really afford this, or have I just been told that I can? Being approved and being able to afford it are not the same thing. The bank's risk tolerance and your financial stability are entirely different calculations. If you actually need a truck, you tow, you haul, you run a business out of the bed, buy the truck with clear eyes, knowing the real cost. But if you don't, the bravest financial decision you can make in 2026 isn't buying the truck. It's looking at the math, looking at the salesman, looking at the chrome, and saying, "No thanks, I'll keep my retirement."